Hello friends, I welcome you all in one more knowledgeable interesting video. Today in this video we will going to talk about recent changes in taxation of charitable trust. Right. We will going to discuss this in today's video, recent changes as proposed by budget budget 2023 relating to changes in taxation of charitable trust, right? Now before coming to the amendment, let's talk about some basic principles for taxation of charitable trust. Let's say for example rupees 100 is the gross receipt, then out of this 100, 15 is the maximum accumulation that is allowed, and 85 a trust have to spend towards the activities which are charitable in nature as per the objects of the trust, right? And in this spending of 85 rupees, trust also have option to donate to other charitable trust. The condition is that this charitable trust should have similar objects, right? This is the condition, that 85% spend can be given to the other charitable trust who have similar objects, right? Now before amendment proposed in finance bill means pre-amended position says that, let's say for example, if a charitable trust donate rupees 90 to other trust with same objects, then rupees 90 is allowable as deduction, or 90 is allowable as application. Now let's see what is the amendment position, what is the amendment that is being proposed. The amendment proposed is that rupees 90, right? When a charitable trust donate rupees 90 to other charitable trust having similar objects, then rupees 90 is not the deduction allowable. Now the deduction allowable is 85% of rupees 90, that is rupees 76.5 is the deduction or application that is counted, that is towards charitable objects or charitable purpose. The entire deduction of 90 rupees is not allowed, 85% of 90 rupees is allowable. Now what is the logic of this amendment that has been proposed? Let's say for example there are 4 charitable trusts: charitable trust 1, charitable trust 2, charitable trust 3 and charitable trust 4. What these charitable trusts do is, in majority of the gross receipt, charitable trust 1 transfers it to trust 2, trust 2 transfers it to trust 3, trust 3 transfers it to trust 4 and trust 4 in return transfer it to trust 1, right? So the effective spending towards charitable activity is very less in this case, right? Because trust is actually transferring money and the money is getting rotated among the trust, but actually not spending for the charitable purpose. That is the purpose of giving exemption to these charitable trust, right? So the amendment has been proposed, right, that only 85%, whatever have been donated, 85% is allowable only as deduction, right? So this will going to tighten the curbs on the trust at the time of giving donations to other trust, because apart from the donation to the other trust, 15% also have to be is the minimum level accumulated, and whenever we donate to the other trust, then 15% is also the amount that adds up to the accumulation, right? So now there is the deduction allowable limit, or the amount that is counted as utilization, right? The counted as like spending towards a charitable activity is only 85% of the amount donated to other charitable trust. And because of these activities, the money got rotated from one trust to another trust, one trust to another trust. So it will going to be this investivized, right? There will not going to be any incentive for doing these rotations of money from one trust to another trust. So it will going to be apparently stopped or plugged because of this amendment proposed, right? Because whenever one trust give to the another trust, 85% is counted as spending, remaining 15% will add up to the accumulation that will going to be taxable, right? If in totality it is beyond the limit, right? So it was the first amendment that has been proposed. Let's talk about the second important amendment that is proposed in the finance bill relating to taxation of charitable trust, right? So what is pre-amendment position? First we need to understand pre-amendment position. This is the balance sheet of a trust, right? Liabilities, assets. In this balance sheet of the trust, there is a loan of rupees, for example, 1 lakh rupees. And this trust obtained this loan through a banking channel. So the bank balance is also there for 1 lakh rupees. Now in the normal circumstances, trust use this bank balance for spending towards its charitable activities. Then it is allowable as deduction, or it is treated as spending towards charitable activities. This is one instance. Second instance, whenever after few years, let's say after 7 years, this trust repaid this amount. This trust repaid this amount of 1 lakh rupees. Then again, this repayment of loan is again counted as utilization of the receipts or spending of the receipts towards charitable activities. Right. This is the second instance. But the money in both the instances is similar. Right, trust is getting the benefit of the same amount of money 2 times towards the utilization towards charitable activities, which is actually not the intention of the law or intention of the provision which giving exemptions to these charitable trust, right? So now obtaining benefit of these 2 instances towards utilization of money has been plugged by the Finance Bill 2023 by proposing an amendment, right? Now, what is the amendment? Very interesting amendment it is. Now, amendment is that whenever any trust takes loan and use that money for the spending, then this utilization will not be considered as the utilization. This is first, right? Now, the amended position is that loan taken and used for charitable activities, right? Then I'm talking about here the first instance. Then it is not allowable as deduction and not treated as utilization towards charitable activities. And when the loan is repaid, that has to be within 5 years. That has to be within 5 years. Then this is allowable as deduction or utilization towards charitable activities, right? So this is the amendment which is now proposed, that if any trust which obtains the loan, right, then use that loan for charitable activities, then at that point of time it is not treated as utilization. But when it is treated as utilization, it is treated as utilization when that trust makes repayment of the loan. And it is mandatory that the repayment should be within 5 years. If beyond 5 years, then it is not considered as utilization, it is considered as accumulation. And if it is considered as accumulation, then trust have to pay taxes on that accumulated amount, right? So now this has also this position, this tax abusive position has also now been plugged, right? We have proper amendment proposed in Finance Bill 2023. That if any trust obtains loan and utilize it for charitable activities, then utilization is not counted at that point of time. Utilization is counted when? Utilization is counted when the trust makes repayment of that loan, and the repayment should be done within the period of 5 years from the date of loan taken, right? So this is the condition that has been in this amended law amendments proposed in Finance Bill 2023, effective from assessment year 2023-24, right? And interestingly, same amendments has been also proposed for obtaining corpus funds for a specific purpose, right? For a specific purpose. Means whenever we obtain funds for the specific purpose, then we create a fund account. And once the fund has been utilized for that particular purpose, then fund account has to be shifted to the common corpus of the trust. So that fund account has to be shifted to the common corpus of the trust within the period of 5 years. Same principles applicable, equivalent to repayment of loan. So the fund has to be transferred to the common corpus of the trust within the period of 5 years, and it is treated as utilization only in the year when that particular fund has been transferred into the corpus of the trust, right? So this is the position as per the amendments proposed in Finance Bill 2023. So thank you for watching this video. If you like this video, click on the like button, subscribe to the channel. If you have any query relating to any of the provision of Income Tax Act or any of the provision relating to trust, taxation of not-for-profit making organizations, charitable trust, religious trust, you can post your query in the comment box. Thank you. Thanks a lot for watching this video. We will keep coming with a lot of knowledgeable, interesting videos on income tax. Thank you. Thanks a lot. Bye.